I wonder if I can bring in the FII angle here, Bobby, and that is to maybe make the argument that considering many of them are routed through Mauritius, therefore they pay no tax in this country, the STT was one way of ensuring that they were taxed at some level, some fashion, in a small fashion in this country. And therefore, is that yet another argument for that tax to stay and not go?
Yes and no. I just think that, it sort of takes away from the clarity of the objective. So my point is sort of more principled rather than, I think, the amounts of money.
But look at it from the point of view of revenue, because that's exactly what this budget is going to be, or have to be. It's going to have to be a revenue-raising budget.
True, and I think that yes, from that perspective, it makes sense. The only issue is that a lot of the rate increases, as I mentioned, took place in a rising market. Today, it is an absolute cost if investors are not making money. So it's it is a transaction tax, but it's it's part of the income tax law. It should be taxing income, but it doesn't tax income. It actually applies regardless of whether you have income or not. Even if you have a loss, you still have to pay.
But these are all still principal objections.
Right? They are principal objections. So I think, and there are depending on when the DTC happens, I think there will be implications on what happens to Mauritius and how treaty protection will work going forward and things like that. So if that were to change for any reason, will that then be a ground to remove STT? And why will that then be a ground to review
exactly
STT?
The question I'm going to ask you in just a bit, but before that, will it make it any kinder to your community, Rashesh, if they were to introduce a commodities transaction tax, a bullet that they have not been able to bite for the past several years despite trying to bring it in? Will it equalize or level the playing field?
No, I don't think it will help, because I think even now what we are seeing is Indian investors, Indian households and all are now actually investing outside of equity markets. They are investing in other instruments, in other asset classes. So I think the idea should be to encourage that, by introducing, and I think another speed breaker in commodities also, you will drive the investments into the real assets, which will not be financial assets in that sense. Like I gave the example, Indian households invest more than $40–50 billion into gold. We would rather they invest in gold through the commodities market rather than invest gold and just keep
in the physical form.
In the physical form.
Okay, all valid points, Madan, but look at this from the revenue raising point of view as well. He needs to raise money. Will it be better if he doesn't do anything to STT, leaves it where it is despite all the lobbying, and maybe introduces a commodities transaction tax that applies on non-agricultural products, thereby maybe slightly leveling the playing field and being able to increase revenue to some extent?
Actually, that makes a lot of sense, because if you're talking of the commodity market, the way in which the non-agricultural segment has developed, it's been fairly remarkable in the last 6 years.
Right. So we're talking metals, bullion, and fuel.
Crude oil and fuel products. And if you look at the kind of price discovery which takes place in these particular products, it's not really indigenous price discovery. It's something which is happening on international markets. Maybe it's the LME, it's the CME where you have the price discovery taking place. It's a kind of a borrowed price in which people are trading and making money. So I think there's a strong case for saying that if I have the STT, I should also have it on comparable commodities. That is, we have the CTT out here. Leave the agricultural commodities out. I think this would be a good source of revenue for the government, and probably at a time when you can say that you're providing a level playing field for all the asset classes.
Okay, Bobby, Rashesh, this question goes to either of you on, do you think it would be a good source of revenue, of substantial revenue, if he was to introduce a commodities transaction tax?
See, I mean, if you argue it from the point of view of raising revenue, I think all arguments will be there. But I think the argument has to go, over and above
Rashesh,
that.
Here's the toss-up, right? From a market's point of view, do you want to see a balanced book, or do you want to see STT go away?
I think, as I said earlier also, I think STT either going away, though it's unlikely to go away.
Okay.
But I think offset being available.
Suppose offset was not on the table. The choice was between STT as it is today and a better balanced book. Chalo, we'll never have a balanced book, but a better balanced book. What would you prefer?
Obviously, STT going away for the simple reason.
Really?
that I think this, as I said, this 8,000 crores is not the key issue. I'm telling you, if you want to achieve 8.5% growth, 9% growth, we need to channelize a lot more savings into investments. We need to do it through the markets.
Balanced book or STT as it is?
No, I think balanced book definitely makes more sense today. And as far as STT is concerned, I think it's not going to be a deterrent for people, especially if the market is moving upwards. So probably today we're living through 2011-12, which hasn't been a good year for the stock markets. So therefore we get this feeling that maybe removal of the STT is going to really buoy the market upwards. But I doubt if it's really going to make an impact in case the markets are stable and moving
so
in the upward
if the inflows continue as they have been for the last couple of weeks, STT will be a non-issue.
I think it should be a non-issue. I think the overall economic conditions, the global conditions, the way the foreign funds move, I think they are going to be major determinants of this market. STT definitely will provide a boost. You remove the STT, it's going to help you maybe for the first 1 week or so, but then things will go back to normal.
That's a fair point. Bobby, I want to come back here to the relationship between capital gains and STT, because I don't think we can talk about STT in isolation. You pointed out that when STT was introduced, it was introduced with the accompanying reduction in capital gains tax by Finance Minister P. Chidambaram at that point in time. How is the introduction of the DTC going to change that? So the question is, will the introduction of the DTC mean a higher capital gains tax rate, and therefore does that pave the way for zero STT or lower STT or offsettable STT in any fashion? And if that is the case, then do you think he might advance some of those introductions a year ahead and bring them into this budget and make everybody here happy?
So as things stand, I mean, subject to whatever the Parliamentary Standing Committee has gone back to the government with and whatever it might eventually do, but the published version of the DTC, the last published version of the DTC, doesn't fundamentally change the capital gains tax impact. There's a different way in which the tax has to be computed, but the tax incidence is not going to change.
So you're saying 100% deduction for long-term capital gains tax and 50% deduction for short-term.
For short-term.
Right.
So if under those circumstances, so the rates are going to remain what they are today. Potentially there is some ambiguity around how it might impact FIIs and whether FIIs will get the same 15 and 0, or whether there is a higher incidence on short-term capital gains for any reason. But otherwise the rate structure is not impacted by the DTC, so that on its own will not pave the way for.
So if there is no increase in the rate structure, then there is no argument that there is an increase in the rate structure because of the DTC and therefore STT would in any ways go away. That argument doesn't survive.
That argument doesn't survive. The only thing is that the tax rates did go up in 2009 after the STT was introduced. So the rates have already gone up one time.
So he's already done the converse.
Yes.
Is what you're saying.
Yes.
A variation to that question, and this has to do with FII taxation. Would they want to persist with the STT in the face of a DTC and all the measures that it's supposed to bring in as well, because there is considerable hostility right now within the tax department and the government that, look, these foreign institutional investors really don't pay any tax because they come through the Mauritius route. So we're seeing great degree of hostility regarding Mauritius itself as well. Do you think all of that could likely change because of the DTC, and therefore could those changes be advanced to this year?
So I think there's a fair chance that some of those changes, or at least it's speculated that some of those changes should happen in this year's budget rather than wait for the DTC to happen. So one of the key provisions is this general anti-avoidance regulations.
Correct,
and the form in which it currently sits in the DTC, if that's brought into the Act this year instead of waiting for the DTC to happen, does equip and arm the revenue with significantly greater powers than what they have today in terms
impacting FII portfolio investments in the equity markets in India?
Impacting, among other things, FII portfolio investments in the market, because a number of those FIIs do invest from Mauritius, which is why they're not paying tax currently. Depending on how this general anti-avoidance regulations are interpreted, and there's many ifs and different aspects to it, but at the base level, what the regulations provide is that if there is any arrangement which, in the view of the revenue authorities, is being created for no substantial commercial reason other than the saving of tax, then the revenue authorities have the ability to set aside that arrangement, to see through that structure, and among other things deny you treaty relief.
So what you're telling me in short is that there's a good chance nothing will change on STT. There's a slim chance that maybe a commodities transaction tax will come in, but there's a bigger chance that something will impact FII investments or portfolio investments in the markets in this budget, and therefore to that extent be a negative for the markets.
Yes.
Okay, I'm going to wrap up here based on what all three of you have told me, and that is, you've made the case for why STT should be reduced or be offsettable, but based on the worst case scenario of what Bobby is telling you, instinctively, can you find a middle path?
I think if you add up everything, and also if you keep in mind the fact that the government of India is going to be one of the larger issuers of sellers of share in the coming year, because as you asked earlier, if the finance minister has to generate income from somewhere, I think they are going to sell between 40 to 60,000 crores worth of shares in the coming year.
Correct.
So I think for the government itself, robust capital markets, capital markets where FIs are investing without any apprehension and fear, where retail investors are finding it a lot more easier, a lot more conducive to be in the markets, is good for the government as a whole. So I think even keeping that in mind, at least some kind of relief, some kind of offsetting, some kind of I think allowing the markets which have just started creeping back and a little bit of optimism is coming back, I think it will be good to have that.
That's a master stroke. He's thrown the ball back into the government's court and said, don't do it for us, do it for yourself.
No, the government definitely is going to raise a lot of money, but I think the STT is a very small part of the entire scenario which we're talking of, because it'll be a bit bold to say that by removing STT, the markets are really going to bounce up and remain at a higher level for the entire year, so that when the government comes for a disinvestment program of 30 to 40,000 crores, everything will sail through easily.
So will it stay or will it go?
No, I think the STT will stay.
It will.
It will stay.
Bobby, will it stay or will it go?
I mean, I think that it will stay. Sadly, I just think that the only counter that I have to it's not impacting anything, and that disinvestment might proceed regardless, and capital markets are not constrained because of this 7,500 crores that's being collected. Equally makes the case for why do you need it then, and why do we need to create multiplicity of regulations and
so you can't see a rationale for it.
I just think that I think that we over-engineer things too much. I mean, if it's 7,500 crores, do we need to create one more law? Do we need to create one more filing? Do we need to create one more assessment? And maybe it's non-contentious, but there is stuff. So why don't we simplify life? And we should do an impact analysis of what things are going to do. Yeah. If it's not going to yield, then or if it's not making a big difference, why have it?
And yet you believe that it will stay.
And yet I believe it will stay.
All right, gentlemen. Thank you very much for joining us on this special. On our next pre-budget special, we will discuss the issue of black money and why it's India's unobtainium.